Welcome to class today. Today we'll be looking at Module 8, that is Insurance Laws in Oceania and Latin America. Insurance Laws in Oceania and Latin America. Module content: Introduction, Latin America, Australia, APR regulation, Insurance Contract Act, Life Insurance Act, APR regulation, Life Insurance Act 1995. We have legislation found on the Federal Register of Legislation. We also have Australian insurance law and the primary federal laws affecting the industry. Introduction. Insurance laws in Oceania and Latin America involve diverse country-specific regulation requiring insurance to navigate different capital, consumer protection and sovereignty rules, as well as varying requirements for foreign company operation and digital innovation. I'll take that again. Insurance laws on Oceania and Latin America involve diverse specific regulation requiring insurance to navigate different capital, consumer protection and sovereignty rules, as well as varying requirements for foreign company operation and digital innovation. Australian mandates specific insurance like the compulsory third party and public liability, while other Oceanian nations emphasize health coverage for expats. Latin American countries show significant differences in financial reporting standards like the IFRS 17 and have unique approaches to underwriting credit and market risk, including distinct statutes of limitation for claims. I want to look at the Oceania. We have Australia. Australia has a specific mandatory insurance type such as a composite third party, professional indemnity and workers compensation with the Australian Security and Investment Commission, that is ASIC, setting standard for product disclosure statements. The General Consumer Protection. The Insurance Council of Australian General Insurance Code of Practice set a standard for insurance to act openly and fairly with customers. The health insurance for expats. When moving to a smaller island nation, expats face challenges related to health insurance with need for local advice and thorough medical kit preparation. So health insurance for expats. Expats are expatriates, person who lives outside the country, outside their own country. So when we talk about expat, they are expatriates. So health insurance for expats. When moving to a smaller island nation, expats face challenges related to health insurance with a need for local advice and a thorough medical kit preparation. The Latin America. In Latin America, we'll be looking at the regulatory complexity, the financial reporting, and the risk-based capital, foreign investment, status of limitation, and digital transformation. In regulatory complexity, operating across different Latin American jurisdictions requires companies to understand and comply with diverse national regulatory standards, including solvency and capital requirements, group supervision and policies for protection of policyholders. Also have financial reporting. There are differences in the adoption of the IFRS 17, known as the NIFF 17 in the region, with countries like Brazil and Mexico having implemented it, while others like Argentina and Chile have delayed adoption. We also have risk-based capital. Regulators are increasingly implementing risk-based capital requirements that considers risks such as credit, legal, market, underwriting and operation as experts. We also have foreign investment. Regulation on foreign direct investments and control regimes can impact foreign insurers' ability to operate in Latin America with requirement to obtain approval for changes in the country. We have statutes of limitation. The period to bring a legal claim for insurance matters varies significantly by country, with some having very short limitation period. We have the Argentina, we have Brazil and Mexico. We also have we also have digital transformation. Insurance in the region are focusing on digital innovation to improve services and regulatory demands, especially with the challenges of adapting to IFRS 17 requirements. We have um the Australian APRA regulation, Insurance Contract Act, Life Insurance Act. So in Australian APRA regulations, the Life Insurance Act 1995 and the Insurance Contract Act 1984 jointly regulate the life insurance industry with APR, that is the APRA, focusing on prudential standard and supervision. The Life Insurance Act in 1995 covering business operations and solvency, and the Insurance Contract Act in 1984 addressing consumer protection and contractual fairness. The Australian Prudential Authority supervises the prudential practice of life companies, ensuring solvency and proper management through its role as Australia Prudential Regulator. The Life Insurance Act in 1995 mandates specific requirements for life companies, including those for prudent management, capital adequacy and solvency, and outline the supervision of these companies by the APRA and the Australian Securities and Investments Commission, that is ASIC. The Insurance Contract Act in 1984 establishes fundamental principles for insurance contract to ensure consumer protection, covering issues such as the duty of disclosure, the duty of utmost good faith, and the regulation of unfair contract terms. So I want to look at the APRA regulation. In APRA, we are going to be looking at the role, the focus, and legislation. The role: the APRA is the prudential regulator for the Australian financial service industry, and it oversees the prudential practice of life insurance companies. Focus: APRA's regulation ensures that life companies meet requirements for prudential management, including solvency, capital adequacy, and appropriate design and management standards. The legislation: the APRA is established under various acts, including the Life Insurance Act 1995 and in the parent agency to the Department of the Treasury. So we'll look at the Prudence Act Service 19, the Life Insurance Act 1995. In Life Insurance Act 1995, we'll be looking at the purpose, key provisions. The purpose of Life Insurance Act 1995. This act regulates the business operation of life insurance companies, focusing on their solvency, prudent management, and the conduct of their business. Then key provisions are supervision, solvency, and consumers protection. Supervision: it provides for the supervision of life companies like the APRA and the ASIC. Then insolvency: it imposes requirements to ensure the solvency and capital adequacy of statutory funds. We also have consumer protection. Provisions are made to protect policy owners' interests, especially in the winding up of life company. We want to look at the legislation found in the Federal Register of Legislation. Legislation found in the Federal Register of Legislation. We have Insurance Contract Act in 1984. The purpose is this act provides for consumer protection by establishing legal principles for insurance contracts. The key provisions are duty of disclosure, duty of utmost good faith, and contractual fairness. Duty of disclosure: this act sets out the duty of disclosure for both insurance and insured parties. Duty of utmost good faith. It includes an ongoing duty of utmost good faith between the insured and the insurer. They will have the contractual fairness. This act includes provisions to ensure that contracts are fair and to provide remedies for unfair contract terms. We'll also look at the Australian insurance law itself. Australian insurance law is based on commercial contract law, but it's subject to regulation that affects insurance industry and the insurance contract with the Australian. The Commonwealth Parliament has power to make the laws with respect to insurance and insurance companies under Section 51, insurance other than state insurance, and the corporation power of Australian Constitution. Generally, the Insurance Act in 1973 and the Insurance Contract Act in 1984 are the main acts that apply. However, there are number of other pieces of legislation enacted by the states. We also have the legislation. The Insurance Act 1973 set minimum capital and solvency requirements for companies wanting to enter or operate in the insurance market. Chapter 7 of the Corporation Act 2001 regulates the way in which insurance and insurance agents and brokers carry on business and how they deal with the people they do business with and intend to do business with. The Insurance Contract Act in 1984 applies to most insurance contracts with an Australian connection and is intended to ensure that a fair balance is struck between the interests of the insurer and the insured. Thank you for listening.